Okay. So that the one person that will be hurt will be anybody who's doing a government loan. And then this lender went on to say that that VA does not allow buyers to pay a buyer's agency fee, buyer's commission, and also VA or FHA does not allow either. So all government loans, and immediately, as soon as that meeting was done, several people came on over, and then they started asking me questions, and literally within 20 minutes, I had that debunked. We had reached out to HUD and we'd reached out to VA and got that debunked. And so that's just not the case. That's just not the case. It is. We do know that that on VA loans, a buyer cannot pay a buyer's agent's fee, but on FHA they can. So that's something important to remember. Okay. I'm just letting the last few people in here. And we're going to go into the presentation. So now, Tracy, because I normally don't do a Zoom meeting, I'm wondering. I'm just going to watch it. I will watch it. You can't see if anybody's waiting in the waiting room.
Oh yeah, I'm getting a few text messages from people who can't get in, so maybe I'll just wave at you.
Yeah, perfect. Okay. So let me share my screen and we are going to rock and roll here. So okay. So yeah, so now that I can't see everybody, just let me know, Tracy, if there's anything. And also we've got Susan on here as well. Susan is one of our loan officers. Susan has been with us now for actually with my team and I for some time. I helped her get in the business back in, I think it was 2014, if I'm not mistaken, 2013, 14. So she specializes in the Spanish speaking market and is an awesome loan officer. So, okay. So the NAR settlement. There we go. So what you need to know. So we'll talk today about the NAR settlement, what you need to know. We'll talk about seller concessions per loan type. We'll talk about loan options and how strategy is more important now than ever. And then I'm going to share a pro tip with you at the very end. So one thing that I've been saying for years has been strategy is more important than rate 100% of the time. And I think in today's market, I think that's more important now than ever. Strategy is literally the most, in my opinion at least, is literally the most important thing in a transaction. Rate is irrelevant. And so the strategy at which we employ to help somebody purchase a house, the strategy at which we employ the rate, the strategy at which we employ the sale of the house. I mean, all of that. The strategy is literally the most important thing. As we go through the NAR lawsuit and the settlement, what we know at this point is that there's a $418 million settlement. We know that that's paid out from NAR over a 4-year period. It goes into effect mid-July. And we know that cooperative compensation agreement has changed. We know that the MLS will not show the commission structure in there anymore. So, but there is, sorry, just letting the last couple of people in. But we are allowed to have the commission structure someplace else. Now, I'm going to propose one thing here at the very end that we can offer. But another area, some people have said is what about in the document section? Could there be maybe a form that you guys put in there that shows the commission structure? Because the reality is especially in this day and time, are you going to reach out to a listing agent to try to find commission? how many calls that listing agent going to have? Are they going to get back to you? So there's a lot of different questions there, but where is that commission going to be? The other, I think, thought is it going to be more like commercial real estate, where it's just in the offer period? So, and the media, of course, last year during all of our classes, the very first of every single class we did last year, we had the media, or we talked about debunking the media, literally every time. And so, so how do you debunk the media in this? I mean, the media is definitely not being kind to realtors right now. I mean, and the media is sharing a lot of misinformation and mistruth. The media is there to sell airtime, media time, and so just like they've made our lives not fun the last couple of years, they're making this an even bigger mess than it really is, I think. So how can we combat the media in this? And again, I've got some ideas on that. So what does this mean? It means that buyer's agent compensation can still be paid, but it has to be paid by the buyer. And it can be paid, well, it doesn't have to be paid by the buyer. It can be paid through the seller still. But buyer agent compensation can be negotiated into the offer. The one question is how are underwriting guidelines going to be impacted? We simply don't know that. Seller concessions, right now, it's not going to be part of seller concessions. However, if you start looking at seller concessions, the verbiage on seller concessions is that the seller can pay anything of the buyer that is normal and customary that the buyer would pay. And so now all of a sudden, where does real estate commission go to on the closing disclosure? Well, it's going to go on the buyer side. So, so now does that become a normal and customary closing cost that the buyer has to pay? What happens? So it's still so new that we really don't know on a lender's side what this is going to look like. There's a lot of questions that we even have at this point. Could raise the cost for buyers if not built into the deal. Definitely will do that. And home value and seller negotiation. Will sellers be more flexible since less commission is being paid? So what's going to happen with the sellers? And again, I think, really it's a matter of the sellers have been paying the commission for so long. So really, what is this going to look like? And I think that really it goes to what you were saying, Tracy, earlier, which is I think that the listing agent needs to have a rock solid presentation. And there's one area that you really can't talk about, which is the commission going to a buyer and what happens if that commission is not paid to a buyer's agent. However, I can talk about it. Susan can talk about it. So I've got a way to be able to show you that we can help be integrated into your presentation to help on the negotiation of what the seller pays for, I'm just going to call it commission at this point, but it's the buyer agreement, fee agreement. Anyway. So right now we know that buyer's agents now have to really provide and prove their value. And this creates not only a rock solid listing presentation, but it creates a rock solid buyer's presentation. So we've got to have a rock solid buyer's presentation going into everything, where one thing that we as lenders had to provide, we had to start showing in 2010 was, what is our value? What value do we bring to a client to constitute our fee? And that's one thing that, again, buyer's agents and listing agents, I think, I think it's going to elevate the I don't want to say professionalism, but it's going to definitely elevate the real estate community. And I think it does create a very professional realtor. And I think that ultimately the agents that are in this for their career, and it's their true career, I think are going to be elevated, and I think are going to excel in this market. Those agents that are kind of sitting here, that it's not their career, that they're just doing it for a little bit of time, to pass the time, to do something or whatever, maybe a side hustle, something like that. I don't want to offend you, but I think that ultimately those agents will end up being gone relatively soon. And so it's going to elevate, I think, the profession. That's what I saw on the lender side, is that it really elevated the lending profession. Of course, then when rates came down, a lot of people got into mortgages as a side hustle. So it cleaned out the mortgage industry, at least rates did. And I think that this will start to clean out some of the real estate industry as a whole as well. So here are just a few ideas, and this was pulled from ChatGPT and others, but buyer's agents perform many duties that are misunderstood. The media right now would have everybody think that the only thing you guys do is help a client find a house. And we know that really isn't the case. Of course, you coordinate the showing, you have access to see the property, negotiation, I mean, right there, that's where you're going to earn the fee that you charge, and you can save a client that much money very, very easily. You schedule inspections, you help gain access for the appraisal access, educate and guidance, really help to coordinate insurance and utilities sometimes, and then really help to orchestrate the overall transaction with the help of mortgage and escrow and closing. So I think that the real question is what happens to over $1 million listings? What happens to a $5 million listing? How do you provide value of $150,000 of the commission that would be earned? What's that look like? And so I think that, unfortunately, realtors are going to be under the microscope for some time. But again, it goes to really the presentation that you make and your value add. So I think also one thing that this does is, again, from a lender's perspective, I think that for so long, the lender has been a vendor in a realtor relationship. And I think that is gone, or going to be gone pretty soon. I think that the value that a lender brings in this, the perspective that a lender brings in this, is going to be invaluable to you as a realtor, and again, will help you excel as a realtor. So, meaning, what are the things that a lender can help and help you bring perspective, or not you, but help the client bring perspective? So we underwrite all of our loans before the client goes out and makes offers. So all of our offers are underwritten loan approvals. Is that valuable? I think that's massively valuable on the negotiation. So you as a buyer's agent, as you're helping on the negotiation, a valuable lender is going to pre-underwrite a file, which will help you in negotiation. We also call the listing agents on the negotiation. So having a valuable lender do that, I mean, it's helped us to be able to gain transactions, gain accepted offers. One thing that we're bringing out is a digital offer. And so what's that look like? Buyers and listing agents presentation toolbox. We're going to be bringing this out, where we've got a lot of information in a toolbox for you that you can bring up. You can make sorry, it's allergy season. I'm going to sneeze here. But you can end up having your normal presentation, and then you can have our toolbox sitting in your arrow, a quiver, an arrow in your quiver, to where you can bring it out and go right to the toolbox and have information right there. I think the other thing that we implemented a couple months ago is a strategy session with buyers. We have it with the buyers, but maybe now there's a strategy session with the sellers. I call it our discovery meeting. And so every time that I meet with a client, I have that buyer's agent in the meeting. We call it our discovery meeting. So we've already got them approved. We've already talked credit. We've already talked income, everything else with the client. So that discovery meeting, we're not talking about the things that are confidential. We're talking about strategy. We're talking about education. And education is going to be key in moving forward. The education that realtors bring and the education that lenders bring. So is there now a strategy session that buyers, that you have with your lender, with a buyer? And is there a strategy session that you have with sellers, again, with your lending partner? Automated values. We have tools for automated values. They can give a quick value of a property. It's not going to be 100%, but is that something that would be valuable? Bid over asking price tool. We've got access to that. So if you're bidding over asking, which I think some of these times we're going to be doing with the offers, how quickly can the buyer recoup their cost? Help to explain appreciation and create report. Buyer versus rent analysis. Real estate report card. Buyer seminars. So it's one thing that we're starting up is we're going to be starting to do on a monthly basis buyer seminars. The next month we'll do a credit seminar. The next month we'll do a credit budgeting seminar, and then we'll start back with a buyer seminar, and then client seminars. So interviewing attorneys, CPAs, financial planners, and insurance agents, and doing that for your clients. So what value?
Bluetooth connected.
So if I could have you mute there, that'd be great. And then helping clients create wealth. So how can you help clients create wealth, and how can you articulate that? Again, I think that a valuable lender can help you do that. And then ongoing support. I think that just my perception is that now instead of talking about maybe the buyer's fee, the buyer's commission fee that maybe is paid, is for your work over a 30, 60, 90-day period of time as a buyer's agent, maybe now you change that narrative a little bit and you say, maybe the script is that, and whoever's not muted, if you can mute yourself, that'd be awesome. So maybe that script goes something like, normally our fee was over a 30 or 60-day period of time for work that we had done, but I really don't see it that way. I see really my primary role now is being able to help you to be able to create wealth long-term. And so I'm looking at a long-term relationship with you as a client. And so really my fee is worth over a 30-year period of time. So instead of a $15,000 fee, it's a fee of $150 a month over 30 years in essence. You can look at it that way. So I think that out of the box creative thinking on scripting of how that fee is paid. Granted, it's paid one time, but then again, what value are you bringing to that client over a long period of time? And I think that for us as lenders, that's one area that we started to excel, is helping the client understand that unfortunately there's still lenders out there that it's a one-time hit, right? And that's just the reality. But for the lenders that I think that get it, they're the ones that are adding value to clients. And I think now that's what agents end up doing, and also helping to create wealth, helping to educate clients of how they're going to create wealth, which then takes that fee over a 30-year period. One thing that I tell clients all the time is that I don't think that my role begins. My role doesn't even begin until after we close on your transaction. And clients are always like, I don't understand that. What does that mean? And so I explained to them that I oversee the transaction at the beginning, but when we close on the transaction, now you're completely our client and you're going to be our client for life. And the way that we monitor that is that we do a 7-day call after closing. We do a 30-day call. We do a 90-day call. We then do a 180-day call, and we do a 360-day call. Then every year thereafter, we do a mortgage review. So maybe now you guys are doing the same thing, but that mortgage review, maybe you're doing a professional real estate review. You're doing a CMA for the client. So what value can you do? What things can you bring to a client that they aren't currently looking at? So one thing I wanted to talk to you about real briefly now is switching really to the creative side of financing. So we dealt with this during COVID a lot, but we haven't as much as of late. But we're going to start to get into this. So let's just say hypothetically, one way that a buyer's agency fee agreement can be paid is by increasing the rate. And so in this scenario, a client purchases a house at $400,000. This was the rate as of yesterday. So rates have popped up a little bit. This is before they started going down yesterday a little bit, but so this is the high side of yesterday. So they're at roughly 7.375 with a fee. We could go to 7.99 with no fee, and we could save the client $3,352. You'll see the closing costs down below were $25,000. That's closing costs and down payment. And then when we reduced that fee for the interest rate and save the client $3,352, you'll see that the cash to close now is $22,095. So really with that, it's thinking outside the box. What can we do? Now, this of course doesn't pay all of the buyer's agency fee, buyer's commission, but it will pay a portion of it. And so, can we get maybe, now all of a sudden, does that buyer's agent end up working for 2 points instead of 3 or 2.5? Can you work for 2 points? Can you get 1 point from the seller in negotiation? And maybe we help you get 1 point by increasing the rate, and then the money that the client would put into the transaction, they now then can pay your fee, the buyer's agency fee. So right now, and again, it can change, but right now, it's the buyer's agency fee is not a closing cost that we can take care of and sell our concessions. So, but that can change. The other idea here is this is multiple facets here, but what if we had a list price of $425? The client would be bringing in or would be bringing in $55,000, and I think they're putting 10% down in this scenario, if I remember. But here their total payment is $2,844. This is taxes, insurance, mortgage insurance, the whole ball of wax. So their interest rate 6.25. This is one scenario that I worked out a couple months ago when interest rates were lower. But here we looked at, okay, what if we built the fee in? We could increase the purchase price to $437.5. That's going to drive the payment up to $2,916, and that's going to increase closing costs by about $1,500, $1,500. Is that okay? That might be okay. So what if the client doesn't have the extra money? And what if the client qualifies for a little more payment, but doesn't have the extra $1,500? What do we do? Well, at that point, we can end up keeping the purchase price at $425. We can end up restructuring the transaction to where it's less money down, and we're going to end up increasing the rate a little bit. So they have less money down. They're still bringing in the $55,000, but we can restructure it that way and call it the buyer representation of agreement fee gap. So that's the BRA fee gap. It's not a Hawaii thing. Anyway. So then the other gap, number 2, would be, again, the same philosophy, but we're lowering the rate But here, the client doesn't qualify unless we maybe buy out the mortgage insurance. So remember that there's multiple paths that one can work the numbers. So that's why a relationship between a valuable lender that can show numbers quickly, strategically through Mortgage Coach, through a total cost analysis like this, not through multiple different fee sheets, because that's very confusing, but can show numbers in this format. It's very clear to be able to see what paths you can go. And again, if you're involved in that discovery meeting, that client meeting at the very beginning, now all of a sudden we can go through and say, okay, client, you're approved at list price. Boom. So here's what the normal transaction looks like. What if we build in the fee? Hey, I saw Jason was on the call. Hey, Jason, what do you think? Would the house appraise for 437.5? And then, we can rely upon your expertise right at that time, Jason. And you can say, well, I'm not sure if it will. And so I can then do an automated value real quick. See, okay, looks like the value's here to here. May not work out. So let's then look at option 3, which is the buyer representation agreement fee gap number 1. Let's maybe do the loan this way instead. We can restructure it, or we can look at option 2. So it's, again, being able to show multiple paths, because maybe option 3, the client doesn't qualify for a payment of $29.58, but they do qualify for a payment of $27.88. So does that make sense? At that point, anytime that you're increasing the price of the house, what's your first thought as a listing agent? And probably your second thought after writing the contract as a buyer's agent. The question is does it appraise? So from there, the question is what are we going to do? How do we work this? And so this is just a path that we went here where, again, we looked at restructuring the transaction, taking the $10,000. Normally, when a client doesn't, or when a house doesn't appraise, that gets tacked onto the cash to close. But if you restructure the transaction, lower the rate, you can come to the same payment that we were at before and possibly even less money to close. So again, thinking outside the box, thinking creatively on how one can restructure the transaction. There's multiple different ways. There's 4 ways, there's 3 ways here, and there's a 4th way here where we don't need, only one path is a seller paying the fee. The other path is the buyer's paying the fee. So it's a restructure and how we look at things. So that partnership, as I said earlier, that vendor relationship that a realtor has with a lender, I think is gone, simply because this becomes more of a true partnership now. This becomes one where there's a lot of communication between the buyer's agent and the lender, and a lot of strategization on how do we create loans that are going to best fit the overall buyer's strategy and buyer's paths. So at this point, then you may get some clients, if you haven't already, that have said, yeah, I'm going to wait a little bit to buy a house. And and Leslie will have time for questions here in a minute. I think I'm going to wait to buy a house. I'm going to wait until kind of seeing how this whole thing with the NAR settlement figures itself out. So again, strategy where we can come in, we can talk to clients about, again, from a lender's perspective, that with higher interest rates right now, it's better to buy a house right now. There's not as much competition. If you're saying that same thing and we're saying that same thing and we provide proof behind it, and you'll have that proof in the tools that we create, then it's a matter of, let's get you over renting and let's help you buy a house now, because things are going to be okay on commissions are going to be paid. So how does that work out? But here's a rent versus own analysis. Clients paying $23.40 a month in rent. Purchase a house, client's going to be at $400,000. Client's going to be paying $3,079. We're going to be refinancing in the next couple of years. Client's now going to be paying $2,500 a month in rent. But when you look at the net after-tax expense, then you're talking $2,340 rent. Net after tax, you're looking at $2,745. So can you articulate right now to a buyer what is net after-tax expense? A valuable lender can. So that partnership is, again, so important. So here, the net after-tax expense on a refinance, that client is netting really below what they're paying in rent right now, which is going to save them a dramatic amount of money over a period of time. So here we've got, a total payments over a 60-month period of time. Rent, they're going to pay $148,000 rent over time. They're going to pay $184,000 for their mortgage payment over that same 60 months. So they'll be paying a little bit more, but when they refinance, it's going to be really close to what they're paying in rent, $151,000. However, $23,000 and $34,000 goes in the client's pocket over that 5-year period of time. So there's the net cost. And we're talking about total equity that's gained over that period of time is $146,000. So a great way to be able to share this is that if you break out $146,000, 275 divided by 5, that's $29,255. So you can legitimately say to a client, if your employer was to give you a $29,000 raise for the next 5 years, would you take it? And the client would say, well, yeah, of course I would. Then let me help you buy a house now. It's just that simple. That's one of the scriptings that I use. And so, because it is like getting a $29,000 raise. And then here's the net worth that a client gets, rent versus own, over 10 years, where again, rent is 0 and they end up gaining $320,000. Of course, over that 10 years, they're paying 148 times 2. It's actually going to be a little more than that because rent increases at least 3% per year. So showing clients that. So let's talk a little bit about the digital offer. I tested this with a listing agent in our area, a pretty dominant listing agent here in the Salem area, and he loved it. And actually, this was his house. So imagine making an offer right now, and this is one way to stand out, and this will definitely be a way that you'll want to stand out as we go forward into lower interest rates, which today's Fed day, guys. So the Fed is going to be speaking here in an hour and 20 minutes, roughly. So it's not anticipated they're going to raise the Fed funds or lower the Fed funds rate today. But what they say is going to be more important than what they do. So, but as rates come down, it adds, I just recently heard a stat that for every every 1% decrease in interest rates, 5 million new people enter the market. So if that's true, then we're going to have a lot of new people hitting the market as rates come down this year and then again come down next year. So your offer, just like in several years ago, could end up getting lost when you're making your offer via email to the listing agent, which is fine. You still do that. But to confirm with the listing agent, you then create a digital offer. And that digital offer looks just like this, and it goes right to their text. And it's a picture of their house, so they see it. It says digital offer, and it has their listing right there. This was actually Sam Labby's listing. So, and then from there, then the agent can open it, and they can see everything in there. There's a video from myself and the buyer's agent, or just myself, whatever. And so in that video breaks out the offer. There's then verbiage that then breaks out the offer. And then from there, then there's the buyer agency fee gap in there, the total cost analysis that we showed earlier. So how are we going to handle that if the seller's not paying a buyer's agent? And there's a appraisal gap total cost analysis in there. So what if the house doesn't appraise because we're increasing it to try to cover the buyer's agency commission. So what happens there? It has the offer in it. It has the pre-approval letter in it. It has the disclosures in it. Everything is in one spot. So now they've got your email, plus they've got this as well. Would that help you stand out? Would that help you gain offers? So again, what is your unique value proposition? So in looking at your unique value proposition, what is that? And can you clearly articulate it today? And if not, then take the next week off if you need to and start to create it. Start to create and nail in your buyer presentation and your listing presentation. Nail those things in, dial those in. I mean, I went years ago, I pulled Tracy into my office and I said, hey, Tracy, here's what I'm thinking of on a buyer presentation. And this was in 2017. As I was really trying to get very clear on my unique value proposition with clients. And I've changed that since. The agents that I worked with, I had in the office, I went through it and said, what do you think? And again, I've changed it over the years, but I can very clearly share my unique value proposition with clients, and they get it as we go through it. Now, marketing wise, here's just a couple things I want to share with you guys that I told you. And I wanted you guys to check these things out here. So here is. And I always find it funny kind of how pictures stop, right? And so I'll do that so I don't look like I'm stoned. I still look like I'm stoned, don't I? But anyway, here's a modern home buyer's guide, a realtor's guide for digital presentation. So it has a video here. This is a link that you can send out. You can also send it out via text. It has a video here, then walks through information. This is the digital offer. So me explaining the digital offer. Here's appraisal gap. Here's the buyer representation fee agreement. Here's affordability solutions. Here's, buyer representation agreement, agency disclosure. So this is one of your playbooks that we can create for you. The other one here, let me move this. This one is one that I created for the Gillette team. And so, is now the right time to buy? It has me walking through information on me explaining why it's the right time to buy. We then walked through questions here with why is it the right time to buy? I walked through here David Stevens, who's the former Assistant Secretary of Housing. It has a little snippet here of what he said. Dave Ramsey, what he said. U.S. Bank, demything the 20% down payment aspect. Foreclosures for housing. I'm sorry, housing forecasts. Has Selma Hepp, the chief economist for CoreLogic. What she said. Myself debunking foreclosures and how they're on the rise. Go through 3.5% versus conventional 3% down loans. Our 100% down payment assistance FHA program. I explained it. The difference between USDA and VA loans. A rent versus own analysis. And then the steps to how to get us approved. This is what the digital offer would look like. Again, it has a video right here of the digital offer. We then walk through, it has you as the realtor. It has the high points of the transaction. It has your offer, has our pre-approval letter, has the agency disclosure, has the digital offer, the appraisal gap, buyer representation, affordability solutions. So here's the deal. I said that you can't put the fee in the MLS, right? That's absolutely correct. But you can put this link in the MLS. So what if we built out a little website thing for you just like this, that then had this link in the MLS that then says, for more information, click here. And now you're taking them outside of the MLS. And in here you have the buyer fee. So what you're paying the buyer fee. Maybe you have a document that says Here's what we're paying the buyer's agency fee. So it's time to really think outside the box with this and look at those types of things. So, all right. I have talked enough. So what questions do you guys have? And what are your overall thoughts? How can we help you most if I haven't covered it? And again, what questions do you guys have? It's the question and answer open session time. And please don't everybody talk at once because it just gets too loud.
Hey, Walt, I have some questions.
Yep.
All right, so this is all super great. I mean, the stuff that you're doing. My question is like, what happens when, we get a client that's come through that already has a lender and that we don't know that's not doing this kind of stuff? Or there's that. And what else? What about too, if like, we're seeing these different houses. I mean, it sounds like we should be, you said, in a discovery call from the beginning, but again, like, if they already come to us with a lender, we've missed that discovery call. We don't know. And it sounds like every time we put an offer on a house for these folks, it's going to be back to the drawing board of like, well, what about this? Well, what about that? Well, what about this? So how do we, so it almost feels like to me, it's taking the whole, solidity of like, yes, they're pre-approved to buy this house off the table.
Yeah, it's
And
great.
so-
Great question. Great thought. So let me tackle a couple things. And if you guys have any thoughts on this, please share as well. So my first thought is again, the relationship between you and your preferred lender is paramount. So let's say it's you and I, right?
Mhm.
At that point, then I think you then in your presentation, and you have a separate presentation that I've built out for you in like the digital offer in your playbook that has me talking to the buyer, themselves. And so you can say something to the effect of, client, I appreciate that you have your lender. I value that. I understand that. Here's what I'm going to ask.
To switch lenders.
No.
Hmm?
Here's what I'm going to ask is whether you choose to work with your lender or not, that's fine. But I'm going to ask, no matter what, you meet with my preferred lender. And the reasons being is because I want to make sure, one, you're in the right strategy. And two, I want to make sure that when our offer is submitted, if you choose to use my preferred lender, that when your offer is submitted, that we have the most chance to get that offer accepted. So my questions to you would be, does your current lender that you're working with, will they do a discovery meeting, a strategy session with you and I and your current lender? Well, I'm not sure if they will or not. Okay. What do they offer? What are they going to do to help our offer get accepted? Because this is a team event. It's not just a one-sided event anymore. It's a team event, guys. So, and then what is your lender going to do for you after we close on the transaction? Well, here are the things that I offer to you after we close on the transaction. Here's the things that Walt offers to you after we close on the transaction. But what is your current lender going to do for you after we close on the transaction? Is it the one in time that you're only going to deal with them? We need to work with professionals currently, and we need to be a team here. So that would be, obviously work that script out. But you can't tell them, of course, to use your preferred lender, right? I mean, if I'm your preferred lender, you can't say, I guess you can, use Walter, I'm not going to work with you. But that's not going to go over really well. So, but I will say that, the whole conversation between using a preferred lender or not, when you look at the major teams in the US, I mean, a lot of them require whoever they're working with to at least meet with their preferred lender. Whether they use them or not, they still meet with them. and they meet with them to make sure they're in the right
It's
strategy.
9:48. Are you watching this stupid Zoom thing? Nobody knows what they're talking about.
Hey, Steven, you're not on mute.
Hello.
Hey, Stephen, thanks, man. Oh, too funny.
Oh, boy.
So yeah. So so Tracy, at least we know some people that are in it to get the CE credit. So
God.
anyway, but
I'm
yeah,
usually the one that does that kind of stuff. Thank God, not me today.
yeah.
Wow.
But anyway, I think it's more value. It's got to be created more value. There's got to be, and it's the partnership between the agent and the lender, and together we can prevail. And so, what other questions do you guys have?
Well, can you go back to really quick to the other one about like, so I like, the script about like, okay, that makes sense saying, hey, this is my preferred lender. Can we at least meet with them, make sure that, you're in the best. But I mean, sometimes honestly, I mean, I have people, it's hard enough to get people to not use like Rocket Mortgage or whatever, and meet with a local person. But it's just going to have to be where we're going to have to, try harder and get them to do that. But now my thing is like, if they're looking at all these different houses and they're thinking, then do we do that like massaging every single time? Like, okay.
No. So it's one discovery meeting, right? And I'm going to tell you that I believe, I mean, so this is just me. And so, and this is what I believe. So there's going to be one discovery meeting. That discovery meeting, we're going to go over, options, right? And during that discovery meeting, I think you not only discover, we talk about the comfort payment. What's the comfort? What is the client? What's the most they can afford comfort wise on their monthly payment? We also talk about what's the most they qualify for. So what they qualify, what's the max qualification, what's their comfort level.
Yeah.
And then we then talk about strategy, and there's going to be a quick discussion, but it's not a new discovery meeting on, okay, this house, there's no buyer agency fee. So therefore we're going to have to go this path. This house, there is one, and we're going to have to go this path. So, but I think that the way business was done literally 2 weeks ago is done. I mean, and look at the movie, look, and I don't want to throw anybody under the bus. So, so I'm really trying to watch my words here. Watch the movie Moneyball. That movie depicts to a T how companies pivot so quickly and how things pivot so quickly. I think that in today's market, there needs to be a pivot, and it needs to happen very quickly. And the people that pivot, the people that use technology, are going to excel. And the people that don't use technology and can't pivot are going to be left in the dust.
Yeah.
Let me share one other thought with you guys real quick. So I have never been a conspiracy theorist ever in my life. I haven't cared. So with numbers that have been coming out as of late, like unemployment numbers, we've had unemployment numbers that for the last 10 months that, they go back and they're awesome right now, but then they go back to a couple months ago and they change those numbers, and they keep doing that. Well, now all of a sudden we've got the manufacturing numbers that they're doing the same thing to. Out of the last 8 months, 8 out of 10 months, they've had to go back and change the numbers and lower them. So that gets me thinking, what's really going on behind the numbers? So let me share with you guys one other thought. Is there's a company that is very, very good at pivoting, and they can pivot really, really quickly, and that company is Zillow. So I'm not going to say what I saw a bunch of people on the forum saying, oh, Zillow was behind this. I don't know. I don't care. But they can pivot very, very quickly. Go back, guys, and look at who the CEO of Zillow is. You guys know who the CEO of Zillow is? Do you know what company he founded back in 2010? It was Expedia.
Mm.
How quickly did the travel agency industry pivot with Expedia? So he also sits on the board of Netflix. How quickly has Netflix pivoted during COVID? So Zillow is going to be able to pivot very, very quickly. What does that look like? We don't know. And we don't know. But I find it to be very interesting still. Again, I'm not a conspiracy theorist, but those that can pivot, that use technology to pivot, and those that can partner are going to excel, is what I'm believing throughout this whole process.
Hmm.
What other thoughts do you guys have? Thanks, Leslie, for your thoughts and comments. I'm really
Well,
curious to know.
Hey,
Go ahead.
well, you
Hey, Jason.
hearing or you had a little cheat sheet that you put out on social, kind of showed some of those numbers, and I understand what you said at the beginning, that VA currently does not allow a buyer's fee to be included in seller concessions, but FHA does. What do you, if this was your crystal ball, not holding you to anything, what do you foresee in the, I guess first, would you go over conventional and USDA and what can and can't be done there? And then what's your crystal ball tell you on what's going to happen, assuming this is all approved through the courts and what have you, to the other programs, if you will?
Yeah. Well, I think, thanks, Jason. I think that's a great question. And thank you for bringing up that cheat sheet. I appreciate that. That was one thing that I meant to put in my slides. So I'm going to share that screen with you guys. You guys can go ahead and take a picture of it and just keep it in your pictures. And so right now, of course, we know that VA is the only one that the buyer cannot pay a buyer's agent. That's the only one. And we know that can, we don't know if it will, but it most likely will hurt buyers on VA transactions. I will tell you that, Laura Gillott and I have talked a lot over the last couple of months, and she already has a couple listings where, and I don't know if you guys have seen this, but she has, where the seller is not paying a buyer agency fee. They're not going to pay the buyers. They've tried to get them to do that. And so one thing that I came up with was, again, as I said early on, I can talk about the ramifications of that. You can't as a realtor, but I can. And so I've built out a deal for her where it's the presentation tool, like I showed you guys, that has the video. And I'm talking about, here's the ramifications, buyers. Here's the ramifications, sellers, if you don't pay an agency fee. So getting back to VA, I share that with you because I firmly believe that VA is going to change that pretty soon, that buyers will be able to pay a buyer's agent's fee. And so I would be shocked if they don't change that. However, it's a government loan. And the government most of the times doesn't move really fast. So how long is that going to take? Could it be a year, 2 years from now? Can it change real quickly? So there, I think it goes to, instead of going VA, people start to go other options. So, our down payment assistance program, which is 100%, we look at that program. I think we start to look more at USDA. However, USDA is so stringent on debt to income ratios. So we really can't push those ratios very hard. And I know in your market down, in the Lebanon, Corvallis, Albany area, I mean, values are starting to creep up pretty good, especially in Corvallis. And so now if we're going FHA, how many homes can we go, can we go that route? So But again, USD, I think we look at USDA. So does that answer your question, Jason? Yeah, I haven't heard anything else. It's you know, about VA or anything. As soon as I do, it'll be, you know, I'll push it out to you guys. But yeah, but it's definitely definitely a topic of conversation. So, and then let me go ahead and share this with you guys so you guys can take a picture of it. There you go. So here's the cheat sheet. Whoops. Can you guys get the whole picture there? So I've got like my thing above there. So so seller concessions, of course, on conventional, and really watch this, guys, because if you're less than 10% down, you're 3%. The seller can contribute 3% towards the closing costs. If you're 10 to 25% down, the seller can contribute 6%. And then if you're 25% or more down, the seller can contribute 9%. If your investment property, the seller can contribute 2%. On FHA, the seller can contribute 6%. Now, I will say that watch the caveat to FHA. So FHA, the seller can contribute 6%. And FHA, the one thing just to know in FHA, in case we start to go more FHA transactions, because we need those seller concessions. On FHA, if the client puts 10% or more down on FHA, for myriad of different reasons, then mortgage insurance can go away on FHA. So remember, FHA, you have mortgage insurance the whole life of the loan, unless you put 10% down. And then VA, of course, the seller can pay up to 4%. The seller can also help to pay off debt on a VA transaction to help the client qualify. And then USDA can pay up to 6%. It really mirrors FHA. So take a picture of that, and then that way it's in your phone, and you've got it.
Sorry, Walt, one more time. 10% down on FHA makes MI go away, not
Yep.
20.
Yep. Well, when you have 22% equity on FHA, so 10% down, if you're 10%, so historically, FHA, you have mortgage insurance the whole life of the loan, right?
Right.
If you put 10% down, once you have 22% equity or a 78% loan to value, you can get mortgage insurance removed. Just like conventional right now. If you put whatever you put down on conventional, 10, 15%, 5%, 3%, whatever. Once you have 20% equity on conventional, you can get the mortgage insurance removed. It's the same thing on FHA. It's just 22%. And if you put 10% down on FHA, that's the only way, that's the caveat to be able to help FHA not have mortgage insurance the whole life of the loan. Thanks, Jason. Any other questions, guys?
Gosh, thank you, Walt, for this class. I really appreciate it. I learned a few things. I have everybody's CE ready to go out. So as soon as I get the list from you on who was in the call for the whole time, I'll get those out to everybody. And that's it. So again, thanks for bringing this some value. I appreciate it.
All right, thanks, guys. Have a great
And
day.
it was nice to see everyone's faces. Thanks for turning your cameras on.
Thanks, guys. See you soon. Bye.